Hello everyone, welcome to Elliott Wave Forex.com YouTube channel. My name is Henry and today is Tuesday, April 28th. The time is around 2 a.m. GMT. So today we'll be looking at the chart of the S&P. This is SPX 45 minutes chart. We can see right here that the index rallies as an impulse here. We have wave 1, wave 2 in blue, with 3 in blue, which subdivides into another 5 with 1, 2, 3, 4, and then this 5 is a diagonal, and then we got a 4 in blue, and then we have we already break above this 3 in blue right now, so this 5 swing is kind of confirmed as a result. Right, so the 5 in blue is already confirmed at this point because we have already broken above 3. You can see subdivision here so far is looking only at 3 waves, so cannot rule out another leg higher to finish a 5 with subdivision within the 5 in blue. And then once we finish these 5 waves, we could potentially end 1, 2, 3, 4, 5, and then this is either ending 1 or ending A, right? Because of the 5 wave subdivision is either ending 1 or A. Now again, couple of other possibilities here. For example, so far we have 3 waves up from the 4 in blue. We could have done a flat, for example, in which you have a 3 waves up and then decline if that's the if that's the case. But other than that, it is kind of risky if you think about it to chase to the long side. It is kind of risky to chase this very tiny move here, but equally it's not really a good idea to fade a 5 waves, right? Fading a 5 waves is never a good idea because 5 waves can always extend as much as it wants, so it is not a good idea to fade a 5 waves. So let's but what this chart is telling us here is that we do have a what looks like a 5 waves right now because we break above 3. In other words, what this chart at least is telling us, okay, this cycle can be mature, but because it is looking a 5 waves, therefore the pullback can hold above the starting point of this 5 waves, which is the March low, in which we're going to take a look by zooming out. So this is the 4-hour chart. This is the March low here, and of course, as you know, this decline is the headline from the COVID-19, so we got a big decline. Then from there we started to slowly recover, right? So far you can see right here we got 1, 2, 3, 4, 5, and this 1, 2 blue, 3, 4 is exactly the same that you want, the one you see here previously in the 45 minutes chart here. 1, 2, 3, 4, 5. So once we complete that 5 waves up from the March 23rd, we could see a 3 waves pullback to correct this cycle. And then if now again, if this is correct, this is a 5 waves, we have a choice, is either ending with 1 or with A, right? Now it doesn't matter whether it is with 1 or with A. The implication is that if this is truly a 5 waves, the implication is that we likely can hold above this low and then extend one more leg at least. Now if it is an ABC, you should at least get a C leg. Now if this is 1, 2, 3, that means this entire decline here is finished, and then indices is gonna go to new high, right? So depending how you want to label it. Now this is what I call the minimum expectation scenario. Whether this is 1 or A or 2 or B, it doesn't matter for if you want to trade. It doesn't really matter because the implications still suggest that as long as we stay above March 23rd, we can get at least one more leg to the upside in the S&P. All right. So again, looking 5 ways up. As long as we stay above that March 23rd low, we could see more upside again later on. But in the shorter cycle, it could be quite stretchy and risky to chase the long side. But if we do get a 3 pullback later on to correct that 5 ways rally, again, as long as we stay above this March low, we can expect at least another leg to the upside again. So hope you enjoyed the video, and if you like to check our service, feel free to try our 14 days free trial. I will provide the link to the trial in the description of the video below. See you all again tomorrow. Have a nice day to everyone.